Peter Rose, Longwood Currency Trading. When you get your momentum wrong for your price action, it can cost you a lot of money. I'm currently underwater in a trade. I haven't had a day when I've closed trades. I don't count days that I'm not trading. I think in the last 20 days I haven't had a losing day. But it looks like today may be that day because I got the momentum wrong. I'm fairly certain about the longer term direction of my price, but when that's going to happen is always the consideration. And so when you're entering a trade, you have to take into consideration what's the momentum doing right now, particularly if you're a day trader. What's the momentum doing right now, and does it have enough juice to get to whatever your profit target is, whether that's 10, 20 pips. And so you really have to be very good in the phase of that opening phase of the life cycle of a currency trade, which is the entry analysis that you need to do. Entry analysis, position management, and exit methodology. Terrific. If you don't get your entry right, you're screwed. Nothing's going to go good for you. And the key to a good entry is to judge the momentum of the price action that's going on right then, and then base whether that momentum is going to be sufficient to stay away from wherever it is that you're going to put your risk, your stop, and it has enough juice to go in the opposite direction and get to your profit target, or at least get far enough away from your take point that you can bring your stop up and get a break even, with the hope that, you know, it's got some more room to move up, so you can at least push that stop 1 or 2 pips up and not be too close to the current price action, so you get sucked out for 1 or 2 pips when the thing could really run, and you could get your 10 points or whatever you're looking to get. You're not going to get 30 or 40 pips in a day trade. That's not how we work things. We're not interested. I'm not going to talk about we. I don't know what you're interested in. I'm not interested in holding trades overnight. I'm interested in what I can get in 2 hours so I can get on with my day. I want to be in, and I want to be out, and I want to be done. Most of the last, I don't know, $6,000–8,000 in profits that I've made in this month have been in about a 15-minute time frame. Now, that doesn't mean from the time that I set the orders up till the time I get out. It means from the time that my initial entry order is hit until it flushes out. Because you can evaluate your situation and say, it's not ready to go yet, but it will be if this happens, if price gets to here, and that's where you put your entry point. So I got that wrong today. I'm confident enough because of the price action that I'm seeing now. This is mid-June of 2022. I'm pretty confident that the price action going against me right now is not in the long-term mood of the price action of the traders, of the order flow that's going on. And so I'm going to let it go a little bit in negative territory. I've made a lot of money in the last few weeks, and so if I got to give some of that back, I'm fine with that. I'm not one of these believers in if you've got a position and you are very strongly experienced in evaluating those positions and the potential direction that it's going to go in, for you to let that risk run as far as you need it to run before it turns around, because you don't want to lose your position. I'm not talking about trading too many lots or a single full lot or something. I'm talking about serious trading when you have some serious bank behind you, your high 5-figure, 6-figure account trader. Because you think a little bit differently. You do the same thing, but you think about it a little bit differently. Well, I got the thinking wrong. What happened was, I got up this morning and sat down at the trading desk, got the platform going, and it was doing nothing. It was just kind of floating along and bobbing back and forth, even down on the 1-minute chart. There wasn't really much wasn't much movement going on. And since I look at taking my take points and my risk and all that stuff on the 15-minute chart, the 15-minute chart thing just looked like a flat line. It was pretty bad. Even on the 15-minute chart, the grid lines on price were 50 pips apart because of the previous action. So, this is a Monday that I'm doing this video. You won't see this until Thursday, but I was sitting at the trading desk last night, or I went in to check prices because the market opens at 5 o'clock Eastern time on Sunday, and so I went in about, I don't know, 6 or 7 o'clock, and price was just kind of floating around. I go, there's nothing that's going to go on here. Went in, we had dinner, and I was watching watched a movie with my wife, and she was going to head up to bed, and I said, well, I'll be up pretty soon. It was like 10 o'clock at night or something like that. I'll be up pretty soon. I'm just going to check a couple of emails, and I'll be up. Great. So I'm in looking at the emails, and I got the trade desk open, and I see this action going on at 10 o'clock at night. This is pound dollar I'm trading at this particular time. What the heck is going on here? There shouldn't be this much activity going on right now. And it started to move in a downward direction. I thought, well, if it continues and it goes to here, it's probably going to have enough momentum to go through 8 or 10 or 15 pips, and I should be able to make a few bucks. But if I'm going to make a few bucks in a short period of time, I need to back the truck up and load it in, because I'm pretty confident about this direction. So I put three limit orders in there. They were all big. I'm going to be pretty deep if they all go off. And I'm sitting there. I was typing up an email response to a friend of mine, and all of a sudden it goes, and all three orders went off. And I'm in there big time. Not quite 6 figures, but I'm in there. I'm in there big. Got out. The whole thing took 2 minutes, and I made $750. I had commented on a video I was commenting on that I'd made $555. I made $755 because when I checked it this morning, because I didn't really care, the thing went boom like that, and then I went to bed, because that was the plan. If it wasn't going to do anything, I was going to cancel the trade. If it was going to do something, I knew it was going to go real quick, and then I was going to go to bed. And so when it went through that, I just did the math in my head, and I said, I made about $555. And when I looked at the thing this morning, it was $755. Okay, a couple $100 more. That's great. The point of the story is that the momentum was right. I got that momentum right. And I said, this is going to calm down, which it did. When I got up in the morning, the price was flatlining. And I said, what happened last night is a precursor of what should continue today, Monday. And so I looked at the current price and I said, no, it just doesn't have any momentum. It's just not going anywhere. And so I sat there until it was probably 11 o'clock in the morning, and all of a sudden, price drops 40 pips. Boom! Like that. And I go, was that interesting? I'll put some limit orders under that, because my thinking in looking at the 15-minute chart and comparing that with a 4-hour chart was, this is about where we're going to have to get to before I'd want to take a probe and see what's going on. And if that probe gets hit, I'll load a bunch in there, because I don't think it has much more room to go. But if it gets to this level, it's going to have enough momentum to cruise through. It should have that. So there was this big movement. Now, I wasn't expecting a big movement. I was expecting it to work its way down through the course of the morning and then start the momentum on a normal type of drop. So I have my orders in place. I see this momentum drop. It goes all the way down, but it's still about 20 pips away from my first limit order. What I should have done is pull the limit orders and got out, just sat there, because that was a 40 pip move, and you're going to have a lot of retracement there. It could have been some big boys trying to scoop up more inventory to then take the price higher, which in fact that's what's happening now. It's against me. But I left the orders there because I thought, well, I got 20 more pips. This thing is going to chatter. It did. There was like a 8 or 9 pin tail on a pin bar. Wasn't really a pin bar, but there was an 8-10 pip tail on this thing that was 30 pips long. So about a third of it was now a tail. And I thought, well, it's going to chatter there. It's going to build up some order interest, and then it should continue on down. It'll go 20, so it's got to go 20 pips, and then it'll have to go through my order set, and that should be reasonable for the day because of the ATR that I'm dealing with. All a great plan. So I'm sitting there, and it works its way down, and I'm thinking, well, maybe I'm going to get this hit. Boom! So that first limit order goes off. And it wasn't 3 mini lots, okay? And it just kind of hangs there. You know, I'm 140 bucks underwater, I'm 150, I'm $22 in profit, I'm $200 negative, I'm $200 profit, I'm $20 negative. I mean, it's just the PL is bouncing all around on the thing. So I'm thinking, maybe this thing doesn't have the juice to, you know, to continue on and go through. And it was down pretty consistently, hovering around about $150 down, which is just for the size that I had on, it was just a few pips. So I left it. Had to answer a phone call, came back in, I'm $700 behind. Okay, well, that's a lot of money, but I made $750 last night, so I'm basically jump ball like I didn't trade last night. I'm playing with the house money right now. So I'm willing to let it go another $750 to prove me right or wrong. So if it goes another $750 against me, okay, I'll get out and I'll have lost $750. I'll have my first losing day in 20 some odd trading days. It would be strange if it doesn't ultimately swing around and start moving in the right direction. And in fact, if I take the situation out and look at the 1 hour or the 4 hour chart, if you believe that price is going to go down against this trough that's created, that is not a major swing point, that we're actually in a situation where we're talking about a regression to the mean. This is what's happened on the 1 hour chart, is that we've had a regression to the mean, and it's poking up like it might go up to the next higher moving average that I'm looking at. If it does, that'll be my $1,500 loss point, which, because it looks like a regression to the mean, I may just let that go. I am not afraid of losing money because I've got plenty of money, and the pip distance is what I'm focusing on, not the dollars. You can't focus on the dollars. You have to focus on the pips, because the dollars will make you crazy. The dollars will make you get out too soon when you're in a loss situation, and they'll make you get out too soon when you're in a winning situation. It's not good to trade dollars. You have to trade pips. So from a pip standpoint, I'm comfortable. From that stupid risk to reward ratio, I don't believe in that. It just doesn't make any sense to me. I think the risk reward ratio is made up by a bunch of people that don't want to lose the money they have, and they're not interested in really growing their account. Because if you followed risk reward ratios, you'd never make any money. You might not lose much money, but you're not going to make any money. In any event, the momentum at the initial stage of that price movement was not what I would have done had that big spike not occurred. What I was thinking was that big spike is the precursor to the move that I'm looking for. It appears that I'm going to have to carry this trade overnight. However, I've only got a small portion of my overall dollar commitment to trade with, not a portion of my entire bank behind me, because this trade isn't designed to use up my entire bank. See, I don't need to do that because I can make 5 pips and make $500. And so I don't need to take the risk of committing all of the money that I have in order to shoot for the long game. I'm playing the long game for dollars, not for pips. And so if the price goes in my favor, which I have several limit orders staged in, so that if that thing comes back, it's going to come back, and it's going to go down past that, and it's going to hit my next order. That next order is another fairly big one. And so at that point, I have to judge the momentum, because as soon as I take that second limit, I've got to watch that momentum. Does it have enough to go to the third and keep on going? And can I trail the stop a safe distance so that I don't get jacked out for no reason and have gone through all this stuff only to do a break-even trade because it hits my average? That's why the understanding and the perception and the probabilistic calculations that you need to do about how much juice price has when it takes that first order that you have put in there, whether you're just playing with one lot and that's all you got and you're all in, all out, or whether you're going to be into some kind of staging. It's all based on the order flow. And if the order flow isn't there, it's not only not going to get you through the staged orders that you're trying to get in to build up your position, but it's not going to get to your profit target. And so the rule when I'm teaching to the advanced people that I have is to be very conscious of the momentum when you're trading a large account. If you're trading a small account and you're all in, all out, bid ask and out with your trade, then you don't have to worry too much about the momentum, because there's not much dollars and you're only trying to build up skill. And generally with those if you're trading a mini at $1 a pip and you go 30 bucks out, you go, okay, I can play this and learn how this is going to go or whatever, and it's a pizza, which is the wrong way to think about it, because you're taking a tremendous risk and learning bad habits to have the thing turn around and go 30 pips in your favor. It's not reasonable that it's going to go 30 pips in your favor. And so when you see it start to stagger, you're going to get out with 10 pips or 5 pips or 3, or maybe you'll hair out and just get out when the thing comes back from its 30. You can't do that. So the teaching that I do is trade with a very short stop. So if you're wrong, what you're wrong on is the momentum. Nothing else. Until you get the skill in judging the momentum, that stop's going to get hit. And you're going to lose many, 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 many times. You're going to have a negative win-to-loss ratio. And so when do you know when you're beginning to get the momentum correct? It's when your win-to-loss ratio begins to flip and it's positive. And I wouldn't get jumping up and down too much unless I had 25 or 30 trades where the win-loss ratio puts you at 60-40. Because mathematically, it's very difficult to make money with anything less than 60-40. And if you're good at math, just sit down and work through some of the calculations that you'd experience as a 60-40 trader to make enough money to justify not only the risk, but the time that you're in the trade, because both of those have to balance out with each other. You can't make a trade and get 5 pips after sitting with the trade for 3 days, right? I mean, even if you're trading a $100,000 account where 5 pips is $500, that $500 belongs on that day, so that you're 0.5% of the money that you're risking. You shouldn't be trading and making less than 0.3% of your amount committed to the trade. So, in other words, if you're trading a $1,000 account, you better be sure that you're getting at least 3 pips out of that every time you trade. You should be getting that 3 pips. You say, well, what good's 3 pips? Well, 3 pips is $300 on a $100,000 account, and it's 0.3% on whatever number you want to put in there against it. But $300 a day, even $300 a day is that's 3 times 5 is $1,500 a week. Three pips. It's $1,500 a week. That's $6,000 a month, and so that's $60,000 on a $100,000 account. Can you get that? Of course you can get it. I mean, of course you can get it. I'm up. I've been trading. I didn't trade January and February because I had a carry trade from December of 21, and so I've traded March, April, May, and we're mid-June now, and I'm 35% up on my bank over 3.5 months. This is a little over 10% a month. But I'm trading big numbers and only grabbing off small pieces as I go, because I'm not trying to shoot for the fence. When I was back trading a $30,000 account, you try for 5 pips. It's $150. It's $150. If you've got a $60,000 account, you trade for the same 5 pips, and it's $300. So you don't make your money by trading mini lots or a couple of full lots. You make your money when you're trading a 10 lot bank, $60,000, $100,000 bank. It takes money to make money, but it takes no more effort to go from making $5 on a $1,000 account, 5 pips. It doesn't take any more effort to make $5, that 5 pips, than it does to make $500 with a $100,000 account on the same 5 pips. You just can't get greedy about it. And so it's so important when you start learning, and I butt heads with people that trade with me. They think they know better, or they got more money than they know what to do with, and they don't want to listen to me. They don't want to go back to trading mini lots because their ego gets in the way, and I want to make $60,000 a year, and I can't do that on a fucking mini lot. Well, yeah, you can't. That's right. But if you can learn your craft, one of the things that you'll learn if you follow the bouncing ball that I put out is momentum. And it's that trade entry where that determination of momentum is about 90% of what you need to know and understand. Nobody teaches that. They all teach Fibonacci, stupid shit, and Bollinger Bands, and oh my God. Oh, you do whatever you want to do. Okay. When I lost my big account many years ago, $40,000, I've since made that money back. But I was trading at $1 a pip. And then I did 3 minis, and I traded at $3 a pip. This year, when I started out trading in the new year, I had a big loss the year before. I made 31% on my bank in 2021 on my risk, but I should have made 68%, but I took a couple of really, really bad losses right at the end that brought that down. Well, you know, that's okay. But because I took those losses, when I started trading this year, when I finally cashed out that one holdover trade, I made, I think, $6,000 on that trade as it came in. But I was trading, I dropped my size down so that I just started out trading 3 mini lots. I did. And then I dropped back in size. I traded a full, then I jumped up to 3 fulls, and gradually grew from there because I had lost a big chunk and I needed to get my timing back. And that's really what momentum is all about, right? It's all about the timing. And so if you can get the timing right, if you can get the momentum right, you'll be okay. I didn't get the momentum right today, and the last time I looked, I was $700 underwater. I'm going to go in and look again and see what that is. I don't expect it's going to change today. I'll probably carry this over for a couple of days. My granddaughter's coming over tomorrow and staying overnight, and we're going to be with her the next day, and we're going to take her up to the in the little town we live, there's this thing called a meeting house, and they've got trails back there that they sometimes, the library puts up stations with art exhibits and stuff for the kids, and they walk through there. So it's a nice little trail, and so we're going to take her up and do that, and then we'll do that tomorrow. And then Wednesday we're going to take her up and climb up one of the local smaller mountains around here, get up on top and look out over Lake Winnipesaukee, and it'll be really great. I'm not going to want to be sitting around the trading desk worrying about whether I'm $700 up or $700 down, because it doesn't matter, because I'm a better than 60-40 trader. So if I got to take a hit and this is a losing day, I don't give a shit. So I'll come back and, yeah, I made $750 last night in 15 minutes. Okay, so maybe I'll lose $1,500 or $2,000 today. Maybe I'll be 5,000 behind before the thing turns around and goes in my direction. If that happens, then I begin to work with the trade and massage it and change the orientation, because that movement would have changed my initial entry analysis, and I will either work the trade so I can just get out of it with making $10 a cup of coffee or something, or I may back the truck up and load it in and get to an easier achievable profit target much sooner before the profit target that I went, because obviously price doesn't want to go down that far right now, and so I just have to change my approach to where I'm going to stage my lots in order to make some money. Will I make money on this trade? I don't know. Will I make money on the next one? I don't know. Well, somewhere along the line I'm going to make money, and I'll make it again, and I'll make it again, and I'll make it better than 60-40, because that's my ratios. I know them really well. I know what my average win value is, and I also have what I call win expectation trade value. It's different than a win rate. It's a different metric that I think is more important really than any of them to give you confidence in what you're doing with your trading. So I'm going to go in and check and see how I'm doing. Have a cup of coffee. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.